Inflation numbers blow up and the Fed is stuck with no options. Now, the latest consumer price index, or the CPI numbers, were just released and it caught everybody, including the Federal Reserve, completely off guard by how fast inflation is heating up and the markets are reacting in a strong and a super fast way. So in this video, I want to break down what these CPI reported numbers are. I want to explain why it's as bad as they are. And really, it's even much worse than they're telling us. I'm going to explain why it's not about supply chain issues, and it's actually much deeper and worse. And I'm also going to explain what's happening with the markets and where you want to be positioned to take advantage of this as it all unfolds. So let's dig in. All right, jumping in, we are talking about the latest CPI, the Consumer Price Index numbers. Now, the CPI index is what the government, the BLS, the Bureau of Labor Statistics, tells us what the inflation numbers are. Now, inflation is a very nuanced argument. I can't go into all the different areas of this, but we could break it down into a couple areas. We can have like asset price inflation. We have consumer goods and services price inflation. But it all comes down to the way it's measured and the way it affects you. So, for example, if you live at home in your parents' basement, you watch Netflix and eat takeout food every day, inflation doesn't really bother you. However, if you're trying to buy a house, trying to send your kids to college, you're working on a single income, inflation hits you really, really hard. So it affects everybody differently. So I don't want to dive into that, but I want to talk about what the numbers are. Now, the CPI is, of course, the government's stated numbers, and as I like to say, they are a political tool. They manipulate those numbers to show you the data that they want to show you. There's a lot of reasons why they don't want those numbers to go up, including as those numbers go up, they have to pay out more money for entitlements to people on Social Security and so forth. Also, if the numbers go up, then the Fed can't print as much money as to change interest rates. So they're heavily incentivized to keep those numbers down. I'm not going to go super deep into that, but just know that they've changed the way they calculate the CPI several times, really big in the 80s, again in the 90s. So today, if we use the numbers that they calculated back from the 1980s, just the way they used to do that, we're more in the 15% inflation rate. But let's take a look. And so let's here, I'm going to jump and share my screen. We can see here today, at the time of this recording, Bloomberg reports that it's the biggest inflation in the U.S. is the biggest gain we've seen in 30 years since 1990. It's astronomical. It says here, U.S. consumer prices rose last month at the fastest pace since 1990. And this is the key piece here. Eroding spending power even as wages surge. So even though wages are going up, people are getting paid more, minimum wage is going up, et cetera, the spending power is being eroded. So you're even though you're making more money, you still are going to buy less and less goods. Your power is being robbed from you. The official number shows the consumer price index, the CPI, rose 6.2% from the year before, and it exceeded all estimates. So this is a key piece here, exceeded all estimates. So the Federal Reserve had set a forecast for inflation, CPI, to be 1.8 this year, 1.8. Now we're at 6.2. Now, the definition of hyperinflation is sustained growth of 50% or more per month. This may not exactly fit the qualification, but if they were expecting 1.8 and it's 6.2, that's certainly more than 50%, in my opinion. Well, that's math. But what we've seen is, again, this is a manipulated number. So let me show you kind of how this is done. So price pressures run hot. It says, right, blah, blah, blah. It's up 30%. But look, this is core CPI, excluding food and energy. You see what they do? Now, the food and energy are the two most important things. As a matter of fact, the most important things that you need to worry about for yourself and for your family are food, energy, and shelter or water, right? You can put food and water together. So food and energy are the most important things. I'm working on setting up a ranch, and I'm working on having a ranch so I can have food and I can have energy and it has water. So food and energy are the most important things. And so they exclude those. And of course, those are the things that have gone up the most. So you can see how much it's gone up right here, and it excludes those things. Now, they are telling us that it's because of supply chains and that it's transitory and all those things. Janet Yellen from the Treasury says that they won't allow it to have another 1970 style increase of inflation, and that the Fed says that we'll do something. We'll raise rates next year. But if you watch my videos on a regular basis, you know that they cannot raise rates because they're continuing to add more debt. Now, I want to show you a couple things. First off, it said here that it's continuing to erode your spending power. And so we can see, if we go onto this website, one of my favorite sites, WTF happened in 1971. And you can see since 1971 at this point that we can see that real wages or hourly compensation has been flat. When adjusted for inflation, we can see that real medium weekly earnings are flat right here while the cost of everything goes up. And so while minimum wage might have gone from $8 to $15, when adjusted for inflation, it doesn't buy you more goods and services, and that is the key piece to understand. Now, as I said, they exclude food and energy, but those are the two things that are going up like crazy. So, of course, they manipulate that number down, and that's what we need to know about. So, sharp surge in energy prices threatens the economic recovery. All right, of course, if you go to the gas pump and you put gas in your car, or you go to the store and buy steak, you already know what these numbers are. A perfect storm of energy shortages and high demand has made the outlook uncertain for energy prices global. And some analysts say a cold winter could make the problems even worse. It says here, consumers have already been paying up for gasoline and heating. So the energy prices have already been going up. Oil prices are up more than 65% this year. So CPI is up 6%. Well, oil's up 65%, and oil drives everything. Oil's at the base of everything. The food, you go to the restaurant, the food for the restaurant had to be driven there. The employees had to drive there. You go buy clothes, well, those clothes had to be shipped. They had to be driven. The employees had to drive there. Oil, energy sits at the base of everything. So when that goes up, everything else goes up. We can see here, while natural gas prices have jumped more than 100%. Natural gas prices up more than 100%. Since October, gasoline prices are up $1.10 a gallon. That's since October, $1.10 a gallon. So that's up almost 50%. Gasoline is up. This is a big, big problem. Now, they want to tell you that you don't understand it. They want to tell you that, as a matter of fact, look at this. Biden appears to mock Americans' intelligence questions, and he questions whether they'd understand supply chain issues. So he basically said, look, it's a supply chain issue. You guys don't know what's going on. You're not smart enough to understand. There's no inflation. There's no problem. But let me explain why it's not. I want to tell you why it is not a supply chain issue. Before we do that, I just want to show you a couple more things. Back to the energy. As I like to say over and over on this channel, the things that are happening are being done by design. They're being done by policy. All right, I've made those videos on the energy crisis happening in Europe, so the power outages going on throughout California. And I said the reason why I was able to forecast these is because they're being done by design. Their policies being put into place. So why are the energy prices going up so high? Supply and demand, right? Everything's supply and demand. If there's less supply and there's more demand, prices go up. If there's more supply, less demand, prices go down. Pretty simple, right? So what would happen if the demand for energy stayed the same or went up? I still need to drive my car, I still need to fly, I still need to turn my lights on at my house. So what if the demand stays the same, but we take the supply down? What do you think would happen to the price? It would probably go up. So since Biden has been in office since day one, he has been shutting down our energy sources, and he continues to do this. This is from 3 hours ago, how shutting down a key pipeline could worsen Biden's fuel crisis. So even today, in a massive emergency energy crisis all throughout the world, if you watch my other videos, you understand what I'm saying, he's still trying to shut down more oil, more energy. You can see here, Biden draws criticism over a possible plan to shut down oil pipelines. He wants to shut down more. Now, again, if the demand stays the same and the supply goes down, what happens to prices? He says he's going to fix this, but it's their policies that are creating this problem. Shutting down another pipeline could send gas prices surging. But here's where it gets rich. So Biden seeks more oil from OPEC, and at the same time proposes new regulations for the U.S. oil industry. So he's basically putting massive regulations on the U.S. oil industry, the energy industry, cutting down the supply, pushes the prices up, and then at the same time goes and begs OPEC, which is the Middle East, the oil producers, the energy cartels, to produce more energy. when we could just do it in the United States ourselves. So the solution is to ban the future use of fossil fuels. So Joe Biden used the EPA with releasing new regulation of the oil and natural gas industry. And rushing this proposal to meet a global conference agenda does not make for a good economic policy. So they just went to this Glasgow summit and they proposed all these ways to cut back on the climate. And so they rushed these things through virtue signaling while they're there. But really, the Biden admin is doing an assault on the American oil and natural gas industry while they were urging foreign oil producers, members of OPEC, to increase oil production. You can't make this stuff up. That's how bad it is. You can see OPEC says to Biden, if you want more oil, pump it yourself. So OPEC's like, look, you got plenty of oil. Pump it yourself. Do what you want. And of course, he continues to double down on these policies. This is a planned demolition of the economy. The CPI numbers, inflation is not transitory. Inflation numbers will only continue going up. And let me explain to you now. I want to break down for you why this is not due to supply chains. All right. So the supply chain issues were caused by the money supply. It's always about the money supply. My favorite economist, Milton Friedman, one of them says that inflation is always and everywhere a monetary phenomenon. So when you increase the money supply, you get inflation. The money supply increases and eventually it finds its way into the markets. It may take time. It may take time to find its way into different pockets and adjust things differently. But what happens when you shut down the economy and then you open it back up, and then you dump $8 trillion onto the economy? Well, of course, everybody goes out and buys things. So many people, you have more dollars chasing the same amount of goods and services, which of course pushes the prices up. Now, typically, high prices are the cure for high prices. What does that mean? Well, when prices go up, two things happen. One, people buy less of them, and two, manufacturers make more of them, which then solves the high price issue. But what happens when high prices go up, but because everybody's getting dumped $8 trillion on their head, they don't care if prices go up, and they keep buying anyway. So high prices doesn't make them buy less. And here's the problem. Manufacturers cannot provide more. So what happens is the prices continue going up. So they say that it's a logistical problem. They say that if we could just get more trucks in and out of the ports, if we could just get people to work more hours, then we could somehow fix this. All right, but that is not the problem. It's not a logistical problem. It's a problem of a delay in the adjustment of the dollar's purchasing power. Right? So the more dollars they put in the system, the purchasing power changes. And so it creates this tsunami of inflation. And just like a tsunami, it starts out in the middle of the ocean somewhere and it gets steam, it gains steam and eventually gradually comes onto shore. And so right now it looks like a logistical issue, right? Like I said, we can't get enough ships in, we can't get enough containers off the port, the trucks can't get in there. But what happens is as Americans are able to demand more goods and services, because money keeps dumping on their head, then they're going to continue to demand more and more is going to be imported. So it's creating artificial demand. That money should not be creating that demand, but because they've artificially dumped money in, it creates artificial demand. Now, a logistical solution to this would be, let's build another port, right? Let's build more ships, things like that. But that would be malinvestment. That would be a bad investment because the demand is artificial. It's artificial demand because of the $8 trillion that's been dumped into the system. By the time a new port would be completed, by the time new ships would be completed, the loss of purchasing power in the dollar would compensate for the backlog. All right. So for an example, let's say that Americans have a demand for $100 billion worth of goods, and that requires 1,000 units of logistical space, or however you want to measure that. So 1,000 containers, call it, right? As prices rise and demand gets concentrated more and more into basic necessities like food and shelter. So as you're running out of money, you start buying the most important things, which of course are food and shelter, right? So it gets concentrated into those things. And as it concentrates into those things, then you buy less and less imports, and that creates more stagflation. So then, let's say Americans will only be able to, say, buy $120 billion of goods. So it went from $100 billion to $120 billion because of inflation. However, instead of the 1,000 units, it's only 800 units of logistical space because the price of everything went up. They can't afford as much, and so there's not as much coming over. So then as prices rise, imports are actually falling in real terms, even though they're still rising in dollar terms, all right? That's the problem. The solution is then rising prices in dollar terms. So if you built another port, you built more ships, you built more containers, it would make sense if the added demand was actually real demand, if it was actually real sustainable demand, but it's not. Right? It's delayed demand that's being concentrated into the present in the form of debt that's being bought by the Fed and being dumped into the system. And so this is not just a logistical problem. We can say it is, but the logistical problem is being caused because of the Fed policies by dumping this money into the system. The policies they're putting in place on the energy companies is causing energy prices increase and is causing CPI inflation to go to the highest point in 30 years. Now, the markets have responded, of course, as inflation goes up. People are rushing to buy real assets. Bitcoin has been the big beneficiary of this today. We're blasted past a previous all-time high. We're almost at about 68,000 at the point at the time of this recording. We'll see how that sustains. And I think we're starting to see the turn. People are starting to realize this is a big problem. I need to protect my purchasing power. CPI is 6% or more, and the bonds are paying about 1%. That means you're losing 5% on your money. What it really means is that if you didn't get 6% pay raise this year, you lost more money. And so everybody realizes this. Everybody's chasing yield. Like I said, Bitcoin's a big beneficiary. Gold's a little bit of a lagger. The stock markets are at all-time highs. Inflation is raging, and supply chains are not the issue. It's about the government policies. Hopefully that makes sense. Hopefully you understand what the CPI is and more importantly, what is causing this. Of course, what are we going to do about it? Don't hold dollars. You need to be in assets that will protect your purchasing power. Of course, hard, real things that can't be artificially manipulated and inflated, commodities. So gold, silver, energy, uranium's cranking for us. Of course, Bitcoin is blasting off to the moon. You need to protect your purchasing power. Let me know what your favorite ways to do that. Leave me a comment down below and let me know how you're protecting your purchasing power. All right. Of course, give me a thumbs up on this video if you like it. If you don't like the video, that's okay. Give me a thumbs down, but at least leave me a comment and let me know why. And that's what I got for you today. All right. To your success. I'm out.